Hi, everyone. Thank you for joining us. I'm Drew Reid, a member of the private markets and venture capital team at RockCreek. We're celebrating Climate Week with a series of discussions about policies, innovations, and investments that will be critical to combat climate change. It's no exaggeration to say that climate change is one of the greatest threats of our time. We see it in the devastating fires and floods, forcing people from our homes, droughts, threatening water supplies for millions, and more powerful storms every year. This is also one of the greatest investment opportunities of our lifetime. The World Bank estimates that we will need to invest $90 trillion by 2030 to make the transition to a low carbon economy and meet the goals of the Paris Agreement. It's my pleasure today to talk with Andrew Beebe, an innovator, executive, and venture capitalist who has dedicated his career to building a new decarbonized economy.
Thanks for having me, Drew. Great to be here.
Just to kick things off, you've been able to see the evolution of cleantech as a company founder, as an executive, and as a venture capitalist. What stands out to you as you think about the evolution and the maturation of cleantech over the years?
Well, I mean, so much has changed that we had to rebrand it to climate tech. I mean, honestly, it's a sea change in terms of the difference of, when I got involved in what we called clean tech back then in 2002, I had been an internet entrepreneur, sold my company in 2002, and really thought about ways that as a founder, I could bring purpose and profit together and try to make a change every day. And the way I wanted to do that was look at macro trends that I thought were transformational, were really sort of leverageable opportunities, as I had just done with the internet, starting a company in 1998 during that first wave. Where I went with that exercise was to look at energy and just a belief that energy was about to go through a massive transformation, because just looking at the curves, you could see that wind and solar would eventually become cost competitive. That was 2002. So it was early, that was an early idea. Al Gore's movie hadn't come out yet. Literally what wasn't out. Climate change was like a thermostat setting. It wasn't like a concept that people were really embracing at the time. And so we were early, and we had a radical impact. A small group of people had a really big impact on the costs of things like solar and wind. And that started this current wave of transformation. But the contrast to today are stark. There were very few entrepreneurs. There was, on a quantum basis, just very different level of dollars involved. There was very little customer demand, customer pull from corporates, from governments, from consumers. And there was very little awareness particularly at the corporate level, but even individually, around climate change. So those things really meant that it was up to the sort of sheer passion and leadership of the entrepreneurs to help bring people along. And that's a pretty uphill battle. All of those components have been turned on their head substantially as of today.
And just to kind of dive into that a bit deeper, you were in a clean tech focused seat during the Clean Tech 1.0 movement. As you think about this recent increase in funding to climate focused companies, how do you think this climate tech wave compares to Clean Tech 1.0?
Yeah, I mean, I think the difference is really interesting. Back then, there were a few entrepreneurs and a few companies that really stood out. Elon Musk got started back then, Lynn Jurich at Sunrun, Jigar Shah at SunEdison at the time. These are a few of the icons that came out of that original cauldron, but there were almost no dedicated venture funds. There were a couple of brave early funds going after this space, DBL and Enertech and a few others, but few and far between, and none of the generalist firms were even looking at this space. And honestly, I think for good reason. There just wasn't that much happening in terms of massive upside. So fast forward 10 years and everything has changed. Those early wins, Tesla becoming one of the most valuable companies in the world, Sunrun going public, SunEdison going public, all of these things helped make people realize there might be something here. At the same time, climate change became much more front and center in the minds of consumers, voters, executives, and of course, eventually government leaders around the world. And part of the reason is that we started to see it. It was a lot more visceral. So as those things came together, um, founders came in and capital came in. Founders came in because during this last boom run, I think a lot of them realized, had some of the same sort of realization that I had in 2002, which is, wait a second, I could go make another baseball trading NFT, company, or I could try to help humanity, exist on this planet. And that was a little bit more exciting for them, a little bit more meaningful, and they could start to see could be a lot more lucrative, a lot more anti-fragile, meaning that in the future, maybe that NFT trading card company isn't so hot anymore. However, in the future, anything going after climate is going to be a bull market in a lot of ways. And so even before the climate bill, which we could talk about, capital started to rush in. And, we've been doing this since day one. We do a lot of different types of investing in healthcare and fintech, but climate is a big part of our footprint. And it's really where I spend most of my time as one of the 3 MDs of the firm. And we've been doing that, in solar, in electric mobility, in carbon, all over the map from about 2015, 2014, really. And these other investors came in, some pure play climate funds, and then some of the generalists also, and then a lot of European investors, because Europe, at least from a consumer standpoint, and in some ways from a government standpoint, has been ahead of the curve. And we've seen really interesting innovation and founding teams come out of there as well. And so that starts to create the ecosystem that we love about Silicon Valley, that we love about technology startups, where we see this collaboration of labs and law firms and great repeat founders and amazing engineers coming together to solve the world's biggest problems. And that's where Obvious loves to sit. We find these mission-driven founders trying to take on the biggest challenges facing humanity today, because we think that creates outsized returns in a venture timeline.
It makes a lot of sense, and it's interesting to see this kind of transition happening in real time. As an early stage VC focused on sustainable systems and climate tech, how do you balance the possibility of a breakthrough kind of moonshot technology with the 10-year fund life window for LPs?
Yeah, Drew, it's a great question. I think a lot of people look at climate and they think, hey, let's go after that. Good for you. But isn't that like NRAL and the national labs? And don't we need big philanthropists to make this work? And maybe once upon a time that was true. I mean, 20 years ago, when I got started, solar was just as a sort of a unit of measure, $10 per watt. And our mission was to make it $1 a watt, an order of magnitude cheaper. And when you talk about that kind of order of magnitude in physical things, it's daunting, right? We've now really moved it down 2 orders of magnitude over 2 decades. And that was a miraculous achievement that took a global ecosystem of companies to drive it down. And it's, I think, really changed the world forever. It's proven that solar energy and wind combined with energy storage can be a viable way to completely decarbonize that sector. It took a long time. There were a number of companies along the way that within a venture horizon, let's call it 10 years, 7 to 10 years, were able to create terrific returns. And that's where we continue to look. So to answer the question, we don't, as an example, I have friends in the venture world who are investing in cold fusion. I'm very excited about cold fusion or fusion in general. I think it has a lot of promise for specific applications. I am not convinced that in a dollar invested today can be returned in venture timescales. And I think that's been proven out over the last 15 years. The future is different than the past, but those early investments that were looking for venture scale returns in that category didn't prove fruitful. Instead, we look at areas where we think we can see real returns faster. And examples include things like vehicle electrification. We've made 6 investments in the EV space, 3 in actual hardware and a number in the software space. We were early investors in Lilium, which is a vertical takeoff and landing electric plane, electric air taxi. That company is now public, and we've been able to exit it in venture timescales. Proterra, an electric bus company, which if we had been an early investor would have been longer, but we came in a little bit later. They're now public, and we were able to exit very successfully. But there's a lot of software in these categories too, like Amply Power. Amply is an electric vehicle fleet management software solution. And within 2 years, we sold that very successfully to BP. So there are plenty of places to have outsized returns and also build large, meaningful companies. Mosaic Solar is a solar finance company that we were early investors in, and it's now got a national footprint selling financing solutions, loan solutions to the vast array, tens of thousands of small solar installers out there, empowering them and making it much cheaper and more accessible for anyone, any homeowner to have solar on their roof in most states now, which is just really exciting. So there's plenty of opportunities out there for venture returns and building very, very large scalable businesses without having to think, wow, do we need to change this to a 20-year turn life on the fund?
Yeah, this segues really, really nicely into some of the key themes. You've dubbed this kind of the electrification of everything. Within the theme of electrification, obviously you've invested in companies like Proterra, Lilium, and Forum Mobility. Are there areas that you think are underinvested still?
In general, what I would say about this decarbonization decade that we're entering, I'm not sure many people have internalized. I think, especially with the climate bill, people are realizing the magnitude of what's happening. But I was part in a previous life as an entrepreneur. I was part of this sort of digital transformation, the beginning of the digitization of the global economy around the internet. It was a little digital before that, but around the internet. And that's still going on. I mean, that's an incredible value creator, massive, one of the most extraordinary value creators of the last 100 years. And I believe that the decarbonization economy that's coming now will have very, very similar economic transformations and thus upsides. And that's because every single sector of the global economy will be decarbonized. There's, that is one big portion of where we focus. There's sort of the effort to decarbonize the global economy. There's the effort to remove the CO2 from the atmosphere that's already out there. And then there's mitigation, things that we're going to do to just deal with the effects of climate change. All of those are highly investable categories. The first one is the global economy. So you can just take the wedges and go down the list. And as an example, yes, I think in electrification of mobility, there's just a ton to do. But just every time you see anything with a tailpipe or an emission, an exhaust pipe, just know that soon won't exist. Here's an example. There's a great company. We didn't invest in this company called Moxion, which is taking diesel gen sets for construction sites and other applications and turning them, swapping them out with batteries. And they literally, just like a diesel gen set or a Sunbelt Rentals or something, they'll swap them out every day. So they run a service as well to drop these things in and pull them out. And right now in California, it's very difficult to permit a construction site within a city with diesel gen sets. They are very polluting, they're very loud, unpleasant for neighbors, and they're not, they're terrible for CO2. So swapping those out with just a stack of batteries is a no-brainer, as long as the whole ecosystem is there to support it. Those types of businesses could get very big very quickly and provide venture scale returns. There are companies in maritime shipping that are trying to electrify anything that moves in the water. Of course, there are many, many companies trying to electrify anything that flies. We placed a bet with Lilium. I think that's going to be one of the earlier ones to actually be moving passengers. But there are people like Universal Hydrogen, which is trying to do a hydrogen-based, larger scale airframe, which is quite difficult because we don't have ways to do extremely long haul travel on all electric. So absolutely, beyond just delivery trucks and recreational vehicles like our company Lightship is doing, we have the opportunity to decarbonize maritime flight, other recreational vehicles like jet skis and motorcycles. Those to us are not big enough opportunities. We're looking for the radical transformations that create multi-billion-dollar outcomes. However, I think all of those are very interesting spaces. That's just mobility. And then you move down into things like agriculture and industry. Fertilizer is a massive contributor to CO2 in the atmosphere, greenhouse gases broadly that ultimately turn into CO2. There are great companies out there like Pivot and Kula Bio. We're not investors in either. Nitricity is another up and comer who are trying to completely remove the use of nitrogen or the use of methane to generate nitrogen in the process of making fertilizer. And these are transformational businesses. What's exciting about them is that they're sort of like Proterra or Tesla, they're making a better product that also happens to have a massive impact on climate. We call it the blank and carbon strategy. So it's not a carbon strategy. You don't just a cheaper way to get carbon out of the atmosphere. You're doing something amazing and you happen to have a major impact on climate. There are companies doing this with enteric fermentation with livestock who are preventing cows from burping methane, which is a similar cement. Cows and fertilizer are all similar sizes of impact on climate. And all of these can be solved with upgrades. They can create higher feed conversion ratios. They can create lower cost and much more stable cost of fertilizer, and they can create lower cost cement, all while reducing the carbon footprint.
It's amazing. You touched on this, very, very briefly, but carbon capture, aiming to take carbon out of the atmosphere is expected to play a very kind of vital role in the race to net zero emissions. Obviously, there are a lot of different forms of carbon capture at varying stages of development. What are you seeing when you look at the carbon capture ecosystem today? And how do you think carbon capture technology will need to develop to become more viable solution?
Yeah, I mean, I should start by saying before carbon capture, I think there's a highly investable space or a broad, highly investable space that is a precursor to it, which is carbon accounting and then carbon management. So software for enterprise to understand what's actually going on in my operations. These are not trivial calculators that we can use on the internet to figure out how many offsets should I buy for my flight to Europe. These are extremely detailed, nuanced, and in most parts of the world, regulated questions that big companies are starting to have to answer. And the climate bill is a big deal. The SEC regulations around carbon disclosure and ESG disclosure broadly are also a very, very big deal. So we're very excited about this space. It's enterprise SaaS. It's not just accounting, but also management. What do I do about it? I can input with one of our companies, Cyanide Technologies, major emitters like oil companies, mining companies, big ag companies can input their net zero goals, which are usually pretty complex too, and then use their SAP data streams to actually have software divine where all their carbon is coming from and when they should do what to mitigate without spending insane sums of money. Because you could take a ton of actions right now, but that might not be necessary. To meet your goals, you could actually titrate them across the years and across your different facilities and locations. So I think a precursor to capture or something that is highly investable and should be focused on is the software to help enterprise in particular figure all this out. There's another piece, which is the trading of credits and the management of those credits once they're generated. And we're very excited about that space. We've made a Web3 investment called Toucan that's very focused on that. Simultaneously, we do have to figure out how to remove the carbon from the atmosphere. So that priority number one is let's reduce what's going in, and a maybe second or equal priority, something we should do concurrently, is figure out how to get the stuff out. I mean, the good news is our planet does that naturally. The bad news is the natural piece of our planet can't do it fast enough because we've created a real challenge. This is a category where we're quite cautious. The climate bill, while extraordinary and I think a very strong net positive, is creating a lot of capital for ideas that won't make it, right? This is part of what we do with government research dollars, and it's part of what we do with some of the speculative work to try to catalyze an industry. And so we have to be careful to see sort of the false correlation between government money going into really interesting scientific efforts and commercial success, or at least sometimes there will be a false correlation if people conflate the two. We're not doing that. We're what I would say is I'm cautiously long optimistic about mechanical or physical direct air capture. Things like, well, there are a bunch of companies out there doing it, and some of them are well funded. I think that most of those do exist outside of the span of venture returns. So we've been less focused on them. I'm more interested in what I would call engineered nature-based solutions or enhanced nature-based solutions. Nature does a great job of tackling this challenge. If we can help her along with some of the efforts, there's a really interesting company we ended up not investing, but it's called Living Carbon, which has found a way to genetically modify trees to grow faster and take in more CO2 over their life. It's a very promising idea. It may have a blank and carbon advantage where it offers timber companies a faster growing tree. It will be faster growing, but it will also have to be well suited for timber harvest. So that won't be known for decades until the trees really mature. But that's an exciting concept. Let's build a better product for timber that also has a very additive impact on climate. That's a engineered nature solution. There are many of those. People are doing a lot with seaweed and other things. And I think they hold more promise. We're piggybacking on a bunch of energy that's already being expended by natural solutions versus having to use all that energy upfront to mimic it. And I think that that's just too expensive a prospect. It requires too much renewable energy, too much build out behind it to make it economically viable in the near term. So that's an area where we might, we have been very cautious and we'll continue to look, but it's not a deep area of focus for us.
No, it makes a lot of sense. You all recently completed fundraising for your latest suite of funds, 461 million of capital across 2 funds, and a prime number again, I may note. As you started deploying these funds, what are some of the thematic areas of interest within climate tech that really pique your interest?
Yeah. So, at a high level, that core fund is focused on sustainable systems, healthy living, and people power. And in the people power, that's really about financial empowerment and inclusion. In healthy living, we're really looking at full stack digital healthcare and computational biology. In sustainable systems, there are 2 areas, climate and industrials. And those have a lot of our companies have a lot of overlap. We have climate fintech, we have health and wellness, like Beyond Meat was a classic health and wellness and climate kind of company. So you'll see a lot of overlap, but industrials and climate work really well together. For us, industrials is about safety and carbon reduction within supply chains, human safety and carbon reduction within supply chains. And then in climate, we're really right now thematically focused around this electrification of everything and around carbon and carbon offset, carbon trading, carbon measurement. I think in the US, we have a particular lens around how long all this is going to take. It feels like everything's moving really slowly. Is this really a thing? And in most other, certainly all over Europe, but in most other corners of the planet, the governments have already acted, regulators are already in place. And so if you're a multinational based in the US or based in Europe, you're already complying with a massive amount of carbon disclosure because of Europe. So I think there's a ton of work to be done there. We have that small bet in Toucan, the Web3 it's sort of a infrastructure play to help with carbon trading. There's a lot more to be done there. Last year, that was a $2 billion market, which is not something we would go after if it were going to be static in that regard, but it's doubled every year for the last few years. We think it's going to go to 5 to 10 this year and be over 100 billion easily by 2030, probably much more than that, particularly as these things start to become commodities that trade hands faster. And I think that there's an opportunity to build a Coinbase or an OpenSea of carbon offsets. I think, carbon offsets are funny because they're frustrating. They need to be transparent. They need to be easily auditable, and they need to be global, and they're not. And when you look at Web3, which I have not been a huge fan of from an investment category standpoint, I just haven't seen anything where it's upgraded substantially a use case. And yet, what I just said, I mean, the blockchain is perfect for things that want to be transparent, want to be auditable, and want to be global, but aren't. So interestingly, I think a more effective carbon marketplace is going to be built on chain, on the blockchain. And this is one case where I think we can say we're pretty bullish about that mashup. And I think that there's a lot more to be done there.
Makes a lot of sense. And you mentioned a few of these over the course of this call, but are there any areas that are currently receiving VC dollars within climate tech where you feel kind of especially cautious?
Yeah, I mean, look, again, unlike 20 years ago, there were a few really wonderful and capable venture capitalists in the space. And of course, a few of them funded my company. So thank you to them. But there is just a much bigger universe of intellectual horsepower, both in the founder camp, which is amazing to see, but also on the investment side. So there are people at Breakthrough Energy Ventures who I have a ton of respect for. They are playing a longer game. They are looking at this on a 20-year horizon. There are people at Lower Carbon Capital that I have a ton of respect for, who are willing to take some of these broader risks that I'm not as excited about. So, with that caveat said, and what I would say is that the numbers are pretty clear. And even when you talk to these founders, I think they'll be pretty open about the fact that things like fusion are going to be longer horizons. Things like quantum computing, which could have really big impacts on climate, are going to be longer horizons. There's an investment thesis that says, well, yes, but you could go public ahead of time, sort of like what happened with Lilium. Lilium is not in service yet, but it's a public company and we were able to exit. I believe that there's a lot of risk in that approach. Fission is another one, traditional nuclear fission, or not traditional, but modern nuclear fission and small and modular. Those are areas that I think are partially because of the climate bill, partially because of the war with Ukraine. Those are starting to maybe unlock. So a couple of years ago, I was very negative on them just because of the regulation and the time. If you look at what's happening in Georgia with their nuclear facility, it's a nightmare in the United States to get something permitted and built, regardless of size. And Bill Gates is investing in a couple of different companies that I think are incredible technology and are not yet in service and should be. So we've been very cautious on those. Additionally, I would say that wind and solar plus storage have proven to be incredible complements to one another. And as storage rides that cost curve down, just like solar did before it, I don't think people realize what an unlock that's going to create. So some of our caution around these areas is just competitive. I'm not sure they're necessary anymore. And then some of it is a concern that they aren't the right viable solutions. And then the third, of course, is that the timeframes for returns just aren't there yet.
So on that note, switching gears to policy for a second, because it obviously does have a lot of implications to what you guys are doing. The Inflation Reduction Act has almost $400 billion dedicated to climate solutions. How do you think this changes the environment, whether it be fundraising or companies that are being created for climate tech focused venture capitalists?
Yeah, I mean, I used to work in Washington. I'm a fan. We are aware of what's happening at a federal level and at a state level, but we never really build an underwriting thesis around the potential for something to happen. And over the last few years, I'm glad we didn't. However, something amazing happened with the climate bill, Inflation Reduction Act. And it's really, I don't believe that most Americans, even most policy watchers have internalized what happened. It's more capital than all capital from the federal government focused on climate cumulatively spent to date. It's an extraordinary amount of money. And as you know, a lot of it is levered up as well. So I think we're really looking at something like $800 billion in total impact. That's insane. And then you take that and combine it with the investment capital that it's catalyzing from LG and Honda and GM and everybody else building EV plants and building battery plants, and ideally in the future, some solar plants, et cetera, across mainly the middle of this country. It's going to be transformational. And I say this from experience because in the solar industry, we realized early on from a policy standpoint, this needed to be about jobs. We had, when I got started, there were literally like a handful of thousand people employed in the solar industry in the United States. I think a couple of years ago, we had hit 250,000. And that at the time was something like 4x the number of people in the coal industry. So that kind of, that just shows you the economic transition that we went through. The same thing is going to happen on the battery front, except this time we won't make the mistake that we made in solar. Solar was not a one-for-one transformation for those coal workers, and it should have been. We should have found a way to bring them over to that field. I think when it comes to electric vehicles and batteries, you're going to see a lot of people who were building the old systems, internal combustion engines, and the supply chain leading up to it, just glide right over to those other factories. They're going to be in the same states, and they're going to have a lot of the same customers. That impact is the secondary impact of the climate bill that not a lot of people are talking about. We are going to create basically a line of people throughout all these red and purple and blue states who just care about this thing that's happened, this energy transformation, this mobility transformation, and soon the industrial transformation to just a cleaner, healthier way to do things. When they see it that way, when they see their wages go from $6 an hour to $22 an hour, or I guess Arkansas is $7.80 minimum wage, but these battery factories are going to be $22 an hour. That's transformational. So they don't have to say, okay, now I'm going to be a progressive or a Democrat or something, but they're certainly going to be in favor of a cleaner economy that's more resilient, that doesn't have a threat of job loss in the future because the demand is insatiable as we go through the transformation. That's a really big deal. And I think it's going to change the landscape of mindsets around climate. And that makes the next climate bill and the next climate bill and a lot of these regulations, I think, easier to swallow because people see employment rather than something negative because of the transformation.
Yeah, we've touched on a lot of key themes from both an investment and a kind of policy perspective. As a final question, one of the key phrases of your Obvious Ideas podcast is, in hindsight, all great ideas are obvious. It's clear that the 2020s will be a decisive decade to help us mitigate the effects of climate change. As you think towards 2030, what do you foresee as key trends and ideas and areas of investment that may not exist yet, but in hindsight will be obvious?
It's a great question, Drew. So, when I was, I have teenagers, kids, and when I tell them stories about the glory days of the internet transformation that took place and how in the late 90s I would pitch venture capitalists about my startups, and they would say to me, this internet thing, is anyone ever going to put a credit card on the internet? It's just not going to happen. I have to carefully explain to them that people imagine that it was never going to be a commercial setting. They just, and of course my kids say, well, come on, you knew that, everybody knew it. It was obvious. And then when I tell them the early days of solar, when it was so expensive and no one believed us and they couldn't imagine how you could power an entire city off of some distant field of solar panels. And they look at me and say, come on, Dad, everybody must have known that, it was totally obvious. I believe that as soon as 2030, young kids will look at cars with tailpipes and say, why would you do that? Like, why would you burn that stuff? And I think MIT students will, or, engineering students will look at all of the use of oil that we say and say, why would you burn that stuff? We can make amazing plastics. It has so many other applications. So I think that most decarbonization transformations, pick an industry, maybe 2030, maybe 25, will seem truly obvious in hindsight, not because they're decarbonizing it, but because they're just better. So you could really pick any field. But I think what will be, if we were to mark this moment in time and everyone were to write down their percentage of vehicles which will be electric by that period, I think people will be surprised how big a number it is at that point. And they won't remember that they were surprised, right? If they'll have to go back and look at their number and they'll say, well, I said it was going to be 15%. And I think it's going to be much more than 50% of new vehicles by that time. And that is something that even just a couple of years ago would have made me the crazy one in the room. And I think now is increasingly sort of sounding pretty obvious.
Well, thank you, Andrew. We really appreciate not only your partnership, but also your thought leadership. And we really appreciate you joining us to give kind of more insight into certain investment opportunities within climate tech.